these conversations, information that you can use and take back and apply in your community. We're here really to drive solutions. But as the title of our forum suggests, we are ultimately talking about how do we bank on financial inclusion. And so we're here now we talked about data analysis, we've talked about sectors that are critical to driving economic mobility. But as we said earlier, and many of our speakers have suggested, it's ultimately about driving capital and investment into these communities. So let's talk about, as Tom Cruise says, show me the money. These are the folks who hopefully will show us a little bit more about how to get that capital into these communities. And so I'm so honored to be here with dear friends, colleagues who all bring varied experience, but have all committed their lives to the mission of economic inclusion in some of the toughest places in this country. My good friend Donna Gambrell, I've known her for more than a few years. She's worn many hats. I think we first met when she was a regulator and bank in the banking system, and we were trying to open up investment in, I think, focus on CRA, getting more capital into low-income communities. You then later led the CDFI fund at the Treasury Department. You're here today wearing a couple of hats. You come over from the dark side. You're actually running a CDFI that serves communities in Appalachia. And you're also the chair of the African American Alliance of CDFI CEOs. And so thank you for being here, Donna.
Thank you.
My colleague, Kiyadh Burt, don't let his age fool you. He is a seasoned veteran. He, along with Andy and Donna, have testified before Congress, making sure that policymakers are clear about the challenges that face our communities and what solutions can be implemented to help uplift people in some of the most economically distressed parts of the nation. Kiyadh is a Jackson State alum, and he is the leader of the Hope Policy Institute. So glad that Kiyadh is here today, as well as a longtime friend. Andy, I think we've been at this probably almost 4 decades. And it is so good to have a leader from the Delta who can bring the lived experiences of what it takes to strengthen communities. You're a deacon in your church, but you're on so many local boards, but you also take the voices of folks from Rolling Fork and Anguilla to the highest levels of power and influence. You are on the board, you served on the board of American Bankers Association. You are on the board of the Community Development Bankers Association. I think you recently stepped down after 2 terms as chair of the Mississippi Bankers Association. And so you punch well above, I think, the weight of what people expect a good old Delta banker to do. And so thank you for all of you for being here. And again, as I said, while each of you sit in very different places in the financial system, you all dedicate your lives to strengthening communities. And so I'd like to ask each of you to kick us off by just sharing a little bit with the audience about your particular niche in the financial system. And so Donna, we'll start with you.
Great, thank you. And good morning, everybody. It's such a pleasure to be here, and so good to see you, Bill. In fact, it's good to see anybody. I felt like I've been a recluse for the last 3 years, and finally have had a chance to get on a plane and travel and meet folks again and be in communities that I so love, but are also facing specific challenges and opportunities as we still continue to navigate through COVID. So a little bit about what I do now, and Bill, thank you. I do wear a lot of hats, as do you. For those of you who don't know, Bill actually served as the chair for the CDFI Fund's Advisory Committee during the time that I was at the CDFI Fund as director. And we got in a lot of good trouble with Michael Barr and others at that time. So it's been a pleasure to see you again and to certainly see all the tremendous work that you and your team at Hope have done, are doing, continue to do in so many of the communities that need this type of support that is essential to growth and to be able to thrive. So I run a CDFI called Appalachian Community Capital, which is an intermediary CDFI. We're focused on small business lending. I raise capital for my 32 members, and then they in turn make loans to small businesses throughout the Appalachian region, which consists of all of West Virginia and portions of 12 other states, starting at the bottom portion of New York and literally going all the way down to the top portion of Mississippi. We have been in existence for about 10 years. I came on board in 2017 as the second CEO. And what I learned and what I continue to learn is that there are so many myths, certainly about rural communities throughout this country, and certainly myths about the diversity or lack thereof in these communities. There is diversity in rural communities. There is diversity in Appalachia. You have black and brown communities, you have black and brown small businesses, and in many cases what you have is a forgotten region with forgotten people. And so you get the double whammy of trying to address the needs in those rural areas where there are people of color who have been there for generations and are literally left out of the financial mainstream. The other hat that I wear is as board chair of the African American Alliance of CDFI CEOs. We came together in 2018. So this was before the pandemic, and I think it was with the recognition and frankly, with the fantastic analysis that Hope Institute policy, the Policy Institute had been doing in terms of looking at CDFIs, the investments in those CDFIs, and the disparities between CDFIs of color and those that were not, particularly as it related to the types of investments that they were getting, the type of awards that were even coming from the CDFI fund, my old stomping ground, but more importantly, the lack of growth when you compared it to non-minority CDFIs. And so we came together, a small group of us of about 20 black CEOs of CDFIs in Raleigh, North Carolina, and said, what can we do not only to support one another, because we certainly felt in many ways that we were isolated, even in an industry that was focused on economic mobility, focused on economic growth, that we were isolated in that community because we didn't necessarily have the same levers that our counterparts did to actually advance our organizations, to move our organizations to the next level so that we could better serve the communities that we were supporting. From that group of 20, and this included Linwood Long, who's the former CEO of Carolina Small Business Development Fund, Inez Long, no relation, who is the CEO of the Black Business Investment Fund of Florida, and myself, said, well, let's put our heads together. We've talked, we're in a group with smart, crazy smart people. Why can't we figure this out and come together and look at ways in which we can not only support those black-led CDFIs, but to actually grow the organization. So from 2018 to the present, we are now 72 members strong. We are located in serving every state in the union. We are, supporting rural, urban markets, every corner of certainly the country, large, small, and everything in between in terms of our asset size. But with the idea that we really are focused on three things, and that is to building the capacity of our organizations and really growing even more as community development financial institutions. Building power, and that means really looking at our advocacy role and saying where do we need to be at the table and where do we need to make sure that our policy priorities are heard and acted upon. and then building the coalitions that are necessary across the industry, outside the industry as well. So we are thrilled that we are at this place in time. It is a moment in time. But we know that there's a long road to go, that we still have a lot more to do. Hope has been a tremendous partner and a member in the Alliance as well, and certainly with Bill's leadership, with his insight and all the expertise. And yes, Bill, you are brilliant. You are a genius. I've known you for a long time. It still amazes me, just everything that's coming from you in terms of the needs that have to be met within the communities that we serve.
Thank you. That's too kind. I'll write a check to you later.
Thank you. Thank you.
And Andy, let's talk about Bank of Anguilla's unique niche in the financial system.
Okay. As Bill said earlier, I've been with the bank now a little over 40 years. Doesn't seem that long. And I heard a disclaimer earlier up here, and I would like to also give a disclaimer that I think there's about 40 banks in Mississippi, 70 banks in Mississippi. And out of the 70, there's probably 69 CEOs smarter than me in the state. But I believe in speaking on community banking, and that is the niche that Bank of Anguilla has, and I'm proud to speak on that. Bank of Anguilla was established in 1904, and we're the only bank in the two counties that we serve, which is Sharkey and Issaquah counties. We have 4 offices, all within those 2 counties. Total combined population is only about 5,000 people. That's not many people to continue a bank since 1904. Sharkey County is approximately 71% African American, with over 35% of the population in poverty. Issaquah is 60% African American, with 44% poverty. We have about $190 million in total assets. We received our CDFI certification in 2013, but we've always been a mission-focused bank, and a lot of that comes through our previous leadership. Our former chairman, Fred Miller's in the audience, and he's on the board of Hope, and we've always been like that. In terms of number of loans, we're primarily a consumer lender with 53% of the total number of our loans in consumer loans. We have no minimum dollar amount. We'll make loans for any amount needed. We make a lot of unsecured loans, and I have to say that carefully because my commissioner of banking's in the audience too. But we know our customers, and we know them on a first name basis, and we know their families. And I'm always proud to say, and I preach it to my employees, that every loan, whether it's to a business or to a consumer loan or to an ag loan, it all boils down to a person. It all boils down to a soul. And I always say that our bank has a heart and our bank has a soul. Our employees established a charity fund several years ago that they give monthly out of their paychecks, and the bank matches every month whatever's given to that charity fund. And then I have 3 ladies that run that fund, and they decide who gets the money, what needs. It's usually for prescriptions or medical help for people in the area or for funerals. Crop production loans subsidize our financial inclusion activities. However, with population declining and no jobs, no factories, core earnings for Bank of Anguilla have decreased through the years, so being a CDFI is very important to the bank for us to be able to continue these activities. We don't have the efficiencies of economies of scales that so many of these larger banks have. You know, our plight is not different than many other rural counties in Mississippi or communities in Mississippi, and it gets harder for Bank of Anguilla, just like many small community banks, to survive in this time. But if we fail, if Bank of Anguilla fails, our community perishes because our customers will lose access to basic financial services. Other banks or some other lenders, they don't understand what a character loan is. That's what we make, are character loans. Again, we know our customers. We make a few home loans. We keep those home loans in portfolio. We don't sell a single home loan. We don't use credit scores. Most of our customers wouldn't qualify if you use a credit score. So we are very rural, as I said. We're very poor, but we make the loans and we try and keep our communities alive. We had, just a quick example, I had I say young African-American man, he's probably 45 years old. To me, that's young now. And he lives in Dallas now and wants to buy a bank and operate it in a poor area. He wants to see what he can do to give back because he grew up poor. And so he was told to come to Bank of Anguilla and see how our bank operates in an area like we do. Never met this man before. He'd never been to Anguilla. He came. He spent all day, and he was just amazed and overjoyed about what he saw, and he actually left in tears when he left our bank that afternoon to go back to Dallas. So I'm proud of our bank. I'm proud of Mississippi banks. I'm happy for what the CDFI fund has been giving us the ability to do, and I think it's very important because I think, and our bank thinks financial inclusion and mobility is extremely important.
Thank you, Andy. It reminds me, I love holidays because it gives me opportunity to watch It's a Wonderful Life and, Bailey Savings and Loan. So what you're talking about, I think, is where banking started. We're obviously moved in very different directions, and different banks, different financial institutions approach their communities in different ways, but it's clear that you know your customers, you know your communities, and I think that helps to close the gap, to keep the gap from widening. Kiyadh, Hope is a different type of organization. We are in 5 states. Can you share a bit about what is Hope, and where we fit in the financial system?
Sure thing, Bill. So just really quickly, I'm going to do another introduction. My name is Kiyadh Burt, Vice President of Policy and Advocacy and Interim Director of Hope Policy Institute. As Bill just mentioned, Hope is a consortium of institutions and organizations that is a policy institute, a credit union, and a loan fund. And together we have worked as one entity since 1994 to increase financial inclusion in the most vulnerable communities in the Deep South. Those are the Deep South states of Alabama, Arkansas, Louisiana, Mississippi, and Tennessee. Now, what makes Hope unique is not just our legal arrangement, like this loan fund, the credit union, the policy institute. It's also the area in which we find our mission and our purpose. Hope works in a region, the Deep South, that has historically been characterized and marred by slavery, genocide, racial degradation, and economic exclusion. And to that end, we see correlated in many of these communities deep poverty. We like to characterize this deep poverty as persistent poverty. That is, any county that has a poverty rate of at least 20% for the past 30 years. And what you'll find that in the Deep South, a third of these persistent poverty counties, that's 476 in the entire nation, are located in our region. That's a third. And with these persistent poverty communities, you see various acute challenges. And I'm the data guy, so I'm hit you over the head with the numbers. 1/3 of persistent poverty counties have unemployment rates 1.5 times that of the national average. Okay, 42% of persistent poverty counties have experienced a health drinking water violation, which is 5 percentage points higher than that of the national average. And of the 158 counties that have a underbanked to unbanked rate 1.5 times greater than the national average, 3/4 of those, 75% of those are persistent poverty counties. And so when we think about the work that we do, is really trying to figure out how do we combat these institutional challenges? How do we meet, as many others have said today, the communities that we serve, where they are in the vein of what they need? And so Hope takes this approach, very strategic and collaborative approach, but first starts with our representation and our makeup. 3/4 of Hope's members are people of color. And not just our members, but also our management and staff. As you all can see, Bill is clearly a person of color, so it's not just our CEO, but it's also our management and our board of directors. But it's also where we choose to place branches, okay? 1/3 of our branches are actually located in persistent poverty counties. 1 out of 5 are located in the Delta, with 3 of those cities being in which we're the only financial institution in those cities, okay? So in thinking about how we choose to meet the needs, we want to go where they are. But it's also not about our location. It's also about the products and the services that we provide. We manually underwrite a lot of our in-house loans. We also provide mortgage loans where people are in need. For example, we we don't consider credit scores. We also take a look at deferring their student loan debt, or rather putting it aside to say, how do we calculate a debt-to-income ratio that would allow people to become first-time home buyers. We have collaborative partnerships with Wells Fargo and through a neighborhood LIFT program, in which we actually provide down payment assistance for first-time home buyers and people of color. And I'd like to say, even in our own in-house mortgage product, 86% of that product is to first-time home buyers. 90% are to people of color. And so again, in thinking about how we do our work, is really meeting the community where they are and providing products and services that meet the needs that they already have. So I'll stop there and share some of the more specific examples for further questions.
Thank you, Kiyadh. Well, Andy, I'm going to go back to you. You mentioned that Fred Miller is on Hope's board. He's been on our board. He's helped guide our organization for a long time. I think the relationship that we have with Bank of Anguilla is unique. Fortunately, we've had partnerships with, more than 40 banks across our region, selling mortgages to Hope when we invested in Hope. In Bank of Anguilla's case, you've invested in us. You made loans to us before when we needed capital to help invest in the communities that we serve. I want to unpack why you see these kind of partnerships as important, and what are some of the other things that you're doing to drive capital into underserved communities in the Mississippi Delta?
Sure. The partnership has worked out well for us. Capital is so important in the Mississippi Delta, and it's hard to raise it from within the Delta. In our area, we have no factories in either two counties that we serve. There are no factories. We've had, believe it or not, we had in our town of 5,000, we had a person come in and we financed a person of color to be a physical therapist in our little community. And that's important to get businesses here. And we use being a CDFI to help bring that capital into our area. We use it because we make so many consumer loans that when you make those small consumer loans, you also have a high number of charge-offs. When you make, to increase home ownership, you take risks when you're in our two counties. When you take, and we make home loans. When you make business loans, you take risks. But it's important to take risks. It's important to take chances. And we get that boost from being a CDFI to bring that capital into our area. The ESIP program helped us out tremendously. We needed that capital. We were approved for the capital, and that has helped to raise our capital ratios. The Bank Enterprise Awards has helped us out. I think the more partnerships we can form, the more we can work together with the credit unions, with other CDFI banks in Mississippi, and with other banks that aren't CDFIs, and raise awareness of what is needed in our area, that's important. I would like to see, I don't know if it will ever happen, but I would love to see the banks in Mississippi and the credit unions that are CDFIs come together in a room like this. And let's discuss the problems together. Let's sit here and let's see what we can do together and bring the capital into Mississippi. I think so often, and when we're in D.C., banks are fighting the credit unions, and the credit unions are fighting the banks, or we're fighting somebody else, that it's all for one goal, and that's to bring our level up. Let's bring everything up. So I think it'd be a good idea if we all concentrated on working together. And I would just issue a challenge to everybody that's in the room today. Let's do that. And we can make Mississippi better, and we can make the Mississippi Delta better too, I think. Thank
you, Andy. I will back you up in that. So let's try to make it happen.
Okay.
Donna, I asked you to wear your Alliance for African American CEOs hat, CDFI CEOs hat, and share some of the strategies that AAA is pursuing to try to drive more capital into financial deserts.
Yeah, I certainly will. And I just wanted to comment on Andy's remarks as well. When you have folks in that room, Andy, it's the banks, the credit unions, and how about the nonprofit loan funds as well?
That's
I
right.
think there's an opportunity for even greater collaboration among all those sectors.
Yeah.
Very important. And so when we look at the Alliance and the work that we're doing, Bill, there are a couple of things that are of high priority for us right now. I will tell you that for us, it's not just the economic justice that's at the top of our list, but environmental justice as well. And so, and as had mentioned, the tremendous amount of federal resources that are coming in out of the administration. And I think the real deep concern about where those funds are actually going, who's going to be administering or controlling those funds. And the Alliance is very much focused on the greenhouse gas reduction fund that was authorized by the Inflation Reduction Act. And so we have been working diligently to make sure not only that our voices are heard, but that funding is going to those organizations that are in the communities of color, that the organizations themselves, led by people of color, or those organizations that are serving predominantly communities of color, are also at the table receiving those funds. To do that, though, you can't go it alone, and I think that's what the Alliance has long understood. And so they've formed a coalition, led a coalition now that's called the Community Builders of Color Coalition. They're working to ensure that Black and brown CDFIs, minority lending institutions, community economic development organizations are all positioned to help small businesses and underserved communities through the funding that's coming out of the administration. And so you look at this coalition, and it is extraordinary in terms of who's actually working with the Alliance at this point. It's the National Bankers Association. It's the National Association for Latino Community Builders, the National Coalition for Asian Pacific Americans in Community Development, AWISTA, Prosperity Now, the Native CDFI Network, Inclusive, which is the Trade Association for Credit Unions, the Chisholm Legacy Project, National Urban League, and the U.S. Black Chamber of Commerce have all come together to advocate on behalf of the communities that they serve. And that's not only in Washington, advocating in Washington, but also advocating at the state and local levels as well, because it is really so important. This is a once-in-a-lifetime opportunity for so many organizations that have long been left out of the funding that has come or that was tagged specifically for certain communities that never got there. So that's some of the work that we're doing. The other effort that we're focused on is actually building internally an organization that we hope will be a CDFI at some point. And so really building and working with investors and funders to build a Black Renaissance Fund. That funding will be primarily capital, low-cost capital that will be provided to members. Because again, one of the things that we found is that when you try to serve your community, what our organizations were facing were some of the same challenges that communities were facing themselves. There was a lack of capital, affordable capital, a lack of grants, a lack of resources, a lack of technology. So we said, don't forget that in this continuum, as you talk about serving communities, you have to look at those community providers as well. And if those organizations are not healthy, if they're not growing, if they don't have the resources, then it becomes even harder to serve the community. So we've been very much focused on that as a way to drive additional capital, not only through our members, but drive that capital in the communities that we serve as well. And I could probably go on, but it really is about, what do we need to do to position ourselves as an alliance, a nonprofit organization, to make sure that resources are coming into those communities that are most in need and are hard hit.
Thank you. And I hear a theme both from you and from Andy, and we certainly believe in a hope that you've got to bring groups together and to amplify the voices, not of our institutions, but of the communities that we serve. You know, people in the Delta, unfortunately, don't have the relationships, the social capital that
Right.
John Friedman talked about earlier, and so it's incumbent on us to bring their voices into rooms that are making decisions. And quite honestly, I think few people do it as effectively as Kiyadh and his colleagues at the Policy Institute. You shared how some of their data helped inform some of the work that AAA is doing. And Kiyadh, if you would share an example or two of where you've taken data from our communities and from our colleagues at Hope and how that's influenced resources at the national level.
I mean, there are really many examples, but the first that come to mind really revolve around small business lending and access to capital with the Paycheck Protection Program. And if I may, I want to take some time to think about the sheer unprecedented amount of capital we have flowing through at least towards our communities post-COVID and post-George Floyd, is that, well, with the Paycheck Protection Program, we're talking $800 billion that was directed to Main Street America, but because it was funneled through a financial service system that was already predicated on the exclusion of many black and brown borrowers, they were simply at the onset of the program excluded from access in the first round of funding. I mean, you have to remember that the largest number of SBA lenders to participate in the program were banks. The Federal Reserve actually showed a survey in 2020 that in the 5 years leading up to 2020, 75% of white businesses had a relationship with a bank, as compared to, I want to say about a third of black-owned businesses have a relationship with a bank. And so some of the stories that we heard from our experience as a PPP lender were that many black borrowers simply were denied access to PPP in the first and second round. As a matter of fact, we did a survey of our PPP borrowers, and we found that 50% of PPP borrowers would have shuttered if they had not gotten access to PPP through Hope Credit Union. Relatedly, 33% said that they were already turned down by a previous bank before coming to Hope to get access to a paycheck protection loan. So when we think about the importance of a community development financial institution, CDFI, or a minority depository institution, MDI, is really being the wedge in the middle, really bridging the gap of access from communities that otherwise would not have it, and then this sheer amount of unprecedented capital that's supposed to be flowing to our communities. Related to that is thinking about all these other federal opportunities that are available now, in which we work, Bill, to make sure that our communities that we represent get access to that. One example is the Greenhouse Gas Reduction Fund, in which there's going to be $27 billion flowing to communities to reduce greenhouse gas emissions and make developments on a house to be more energy efficient. Another example is thinking about the State Small Business Credit Initiative, which has the opportunity to be quite better than the Paycheck Protection Program. It's a $10 billion program administered by the Department of Treasury. But our fight, at least in that particular program, like many others, is at the state level, making sure the state development financing agencies ensure that not only do small businesses and communities of color get access to these funds, but also the communities that serve them get the appropriate financing in terms they need to not only be sustainable, but to be well positioned to continue this work long after the program ends. And so another example in the ways in which we take consumer or borrower stories and that helps aid our policy developers and advocacy on Congress and state legislatures is currently thinking about the ways in which inflation and the rising cost of living impact their ability to be solvent, their ability to make ends meet. We, frequently survey our subject matter experts who have the front-facing experience with our members and communities, and we've heard stories on the retail side of one borrower in Memphis. He's a black grandfather who came out of retirement to work 2 jobs and still came to Hope for a loan to buy Pampers. We just got this information a month ago, right? And so we're working with him to get him access and capital to make ends meet for Pampers. There's another story of a black woman child care operator on the coast of Mississippi, Biloxi, who had to reduce her services this year to make ends meet. Again, she came in asking for a loan to help cover wages for her employees, but yet and still had to reduce services to keep her overhead manageable. And so what we're seeing is that even now our communities are suffering and struggling through the post-pandemic effects, and yet and still we take these stories and we go to Congress and we go to our peer institutions and say, how do we work together to bridge the gap? And then thinking about small business, even looking at the Delta or these persistent poverty communities, much of what the data shows really boils down to the fact that our communities need affordable capital, particularly thinking about the ways in which we can collaborate to bridge upfront costs, right? Here's something that we probably all know is that when these CARES Act monies or these federal dollars come down for disaster relief, it's often in the model of reimbursement. But for many small towns, municipalities, and just small businesses, what money do they have up front to expend? You cannot be reimbursed for money you don't have to spend. And so we work, for example, very closely with municipalities in the Black Belt of Alabama to create a product to bridge that gap for them to access CARES Act money. Mm-hmm. So these are some of the stories that have bubbled up from our community and our engagement to say that, CDFIs with a strong track record of lending to these underserved populations and MDIs are important and necessary for us in bridging the gap, and really underscores the impact of financial inclusion. Because financial inclusion is just not about having access to a check and a savings account. It's about having access to the relationship, right? It's the economic interconnectedness that allows you to be aware of what's happening at the federal and state level, but also to understand that you, your community, the people that you represent have purpose and have the ability to materialize the economic dreams that you all desire. Mm-hmm. So that's a bit about what we do and how we do it.
Bill?
Bill, if I may, Kiyadh talked about the issues and the challenges with the reimbursement piece, even the matching grant piece.
Yeah, absolutely.
I mean, again, communities simply do not have the money to do one-to-one matches on grants, and so it's always just a challenge, I think, even when you see that there is an infusion of capital coming into a community. If a community has to raise the same amount of money for that grant that they're getting, it's almost impossible for them to do that, and money's left on the table.
Andy.
And you mentioned knowing what's there in our state and national levels, the education part of it, et cetera. In a small community bank like ours, we've got 32 employees, small, but due to retirements, I've hired 22 of our 32 within the last 5 years. Huge turnover in the bank, mainly because of retirements. So we're having to talk to these new employees about culture and about what's out there and about the CDFI fund. And we send every new employee to the School of Banking at the University of Mississippi. Everyone goes to. The last 6 hires I've made, 4 were persons of color. Every one of these will go to the School of Banking, will graduate from that. When they graduate, they go to Washington, D.C., spend about 4 days. They go see our congressional delegation, our senators, and they go to the Emerging Leaders Forum for bankers in D.C., and that way they have knowledge of what goes on in D.C. They learn about the laws and the regulations, and they learn about the CDFI fund. And I think that's important that as we bring in, you're talking about, putting people together. It puts these people that we hire in our little bank together with people from all over the nation. And I think that helps, and it gets them trained as they wait on our customers in our area.
No, that's exciting, and I just hear a lot of connection with some of the themes that have been shared earlier about connectedness and the cohesion. We said that, we talked about the billions and billions and billions in federal investment that are now being made to get the economy back on track and to close gaps. We've seen over the years during crisis how unless there's intentional efforts to make sure that those resources get to the communities that are disproportionately lacking, that the funds will flow like water to the easiest places. And easiest places are not the Delta, it's not the Black Belt, it's not communities of color. And so what are some of the things that your institutions, that a Delta Bank, that an organization of CDFI CEOs, that an entity like Hope can do, will do to try to make sure that these amazing levels of resources get to the communities that need it most? And are there things that policymakers should be doing to help make that happen more effectively? Andy, I'll start with you.
Sure. As far as policymakers, too often there's a big disconnect between Washington, D.C. and the Mississippi Delta. A lot of the people that make the rules or oversee the rules don't understand what it's like to grow up poor. Well, they don't understand what it's like to exist in a rural environment. A lot of them think that there's a Starbucks around every corner. I have to go an hour and a half for Starbucks cup of coffee if I want one. You know, a lot of people don't understand $20,000 home loans. A lot of the policymakers don't understand $10,000 car loans or $5,000 car loans. A lot of the policymakers don't understand $100 loans for electricity, or you know, you were telling some stories, and I've got, you know, just as many for the loans that will break your heart. And it's important that these monies come down. In small town America, we make loans just for the basic necessities of life. It's not for big, huge investments. It's for your daily cost of living, and so many people don't understand that. And to me, that is what is so important. And I hope that our policymakers in D.C. recognize that. I think when we get these monies, it's important for us as bankers. You know, with our staff, with the new staff, it's hard for our bankers and our people with all the education they've got going on for themselves to know all that's available out there for our customers. So it's important that we educate, those of us that's been around a while, to educate our supervisors, our mayors in our towns. It's like Donna was talking about, and others, bringing people together. It's important reporting. You know, so much of this requires reporting to show what you're doing with your grants. That is very important to make sure that it's going to the right place. And it's finally, morally, again, it's the right thing to do. That's what we're supposed to do. We're supposed to make sure that this money that's coming down to help our counties goes into the right hands, and it helps the people that we want to help and that needs help. I mean, y'all know the Mississippi has a long history of segregation, of bad times. The Mississippi Delta, probably some of the worst. But hopefully, times are changing. Hopefully, with gatherings like this, eyes are open. Hopefully, through the laws that are passed in Congress that are trying to stop this, but hopefully there is a change coming through America and through the banking system, and we can make changes. They're needed.
I'll hop in and say, you know, this question reminds me of a quote by Frederick Douglass, where he says, power concedes nothing without a demand. And it also reminds me of what Malcolm X and what Kwame Ture would say. Malcolm would say, if he were here as he did then, it's not that we're outnumbered, we're out-organized. And Kwame would have said the same thing, as we have many mobilizers but few organizers. And so in thinking about how do we apply pressure on our political institutions to ensure that they do right by those that need greater capital access and access to financial services, it's around accountability and transparency, right? If we had, let's say, Section 1071 would have came out before COVID, right, or before the Paycheck Protection Program, you know, we would have seen more clearly the rate of discrimination that many black-owned businesses and business of color faced, right? Or say we had a stronger Community Reinvestment Act. You know, how then would we be able to substantiate the claims of exploitation and denials by homeowners and small business owners, right? So the idea is to say if we get better data, we can get better arguments. And these arguments are not being pulled from the sky. They're coming from long experiences and histories of being excluded and exploited. And so to me, we get better at advocacy when we have better data. And then the second point is accountability. The reality is we won't achieve a greater America if we don't have a greater Mississippi. Like the future of America literally rests with the future of black folks and brown folks and other folks of color. And so really keeping the argument around inclusion, around the argument of history. Like the reality is we can only go so far individually, we'll go so much farther together. And so really tying into the future of America to the future of, let's say, the Deep South or these other persistent poverty communities is important. And again, just to make this distinction, or rather comparison, it's not just the communities that we serve, it's the institutions that serve them. All those CDFIs with a strong track record and MDIs have been doing this deep work. An example, in Louisiana, CDFIs deployed 7 times more PPP loans than the 5 largest banks in the country. That's amazing. That's impressive. And yet we found, Donna, that CDFI fund awardees, so these, even in those that got awards from the CDFI fund and were certified, had less wealth at the median, less capital assets than white-led CDFIs. So they do more impact with less resources. No way could that be sustainable. And so in thinking about how we are all responsible for the outcomes of the financial service system, because it shouldn't just be Hope and Communities Unlimited, and Fahi and other partners in the region and the country doing the deep work for the communities that look like us. It should be everybody. Mm-hmm. And so finding policy and pushing policy levers to make sure that that's the case when you have so much money coming down. It's not just PPP or SSBCI, it is EPA, it is broadband, right? It is money that could come down for down payment assistance too. So just making sure that these monies are accountable to communities that we don't want to see left out. Mm-hmm. Because again, Inez mentioned, what will we do for utilities or water services and management? So it's a real question that we need to answer, but I do think between accountability and transparency, that should get us in the right direction.
Mm-hmm. And it means that all of us then have to say that we are community activists. Mm-hmm. That we can't sit back and say somebody else will do that. That we all have to say it's our responsibility to do as much as we can at the community level, whether it's local, state, federal, philanthropy, nonprofit, private sector, public sector, that we all have a responsibility to take action on this. You know, the last panel, Judy talked about people having the will. It is the will, but it's also looking at policy and changing that policy so that the practices are eradicated to allow for that change to happen. And I think it does start at looking at those policies. It's what Inez has talked about, people deciding that this is my community and I'm going to come back and I'm going to be in making sure that I'm in specific positions in this community, that making decisions that has the power to really make change within that community itself. But that means all of us have to then make that commitment to say we will do as much as we can. And even though if it feels like a little, it's a lot. It's a lot to move forward, to be able to say that we are going to actually take the action that's necessary for that change to happen.
So we have here today the head of the Mississippi Banking Commission. You've got the Consumer Finance Protection Bureau. You've got the president of the Federal Reserve Bank of Atlanta and the top bank cop in the country. What advice, what would you ask them to do to help make sure that financial inclusion occurs in the Mississippi Delta, in Appalachia, across the Deep South? And is there anything that you would, you've got the ear, what advice do you?
My advice would be to get involved. My advice would be to listen to the CDFIs. My advice would be to listen to the stories that Hope was just talking about of how what we do affects just the daily lives of people. Because if people like Hope people like Donna, people like Bank of Anguilla no longer exist, think of what our country will look like in the future. You know, to me, we're the heartbeat of America. We help our communities, and we operate in communities that are difficult. It's hard for us to even exist in them sometimes. But we are changing, and we are trying really hard, and it gets difficult sometimes with some of the laws that do come down for small banks. I'm speaking on behalf of small banks here. It does get hard for us to do our mission. I'm proud of our bank. I said it too many times, I know, in what we do. But, even us, we're changing I hope to be retired in 4 years. I've told my board that. I'm getting old and I'm getting tired. And but in 3 years, you're looking at a bank that was formed in the Mississippi Delta in 1904. Most likely, the CEO will be a woman, and two of our top 3 will be women running our bank, with one person of color running our bank in the Mississippi Delta. And so change comes about, but we've got to be proactive in it, and we can use y'all listening to our stories and helping us out.
Yeah, and I'll add and say, Dr. Wiggins mentioned this earlier. So often when we talk about the challenges of the Deep South, per se, we use a deficit framing. But I would say whatever your area of influence and whatever tools you have available to make change, think about this Deep South as an area of opportunity. Shout out to Opportunity Insights, right? Like, you think about how, sure, we have these challenges, but this is an opportunity to make history in a positive way, right? Where you see that, sure, we've come from so many years of, again, economic exploitation and degradation, but that doesn't have to be tomorrow. Where today, with this Economic Mobility Forum, we could use this as a launch pad to say, I'm going to make change in my community. And I'm going to do it by including these voices in the Deep South. And the Policy Institute has 3 goals, and that's to increase financial inclusion, financial investment, and amplify the voices of the Deep South. That's the bedrock of our success, is putting our members and our communities at the forefront of our policy and advocacy. And so they really steer the ship. I mean, we are a credit union, so we're a cooperative model. Our consumers, our clients are also members, but that could be the case in your own organization. How do you put this population in power? Because, they're the most in need. That seems like good policy to me, right? And so I think that, regardless of where you can go or what you're responsible for, is increasing consumer protections, increasing investment, and increasing and amplifying the voices of those that need to be heard the most.
Thank you. Donna, now you've been on the policy making inside. Now you're in the seat of CDFI CEO.
Yeah.
What's your advice?
Well, if I could wave that magic wand, Bill, we live in a capitalist society. That's not going to change anytime soon, I don't think. This is where we live. This is where we will be. And I've often listened to people who say, oh, if you just work hard and, pull yourself up by the bootstraps, that will put you on a great road to success. But what happens if you don't, again, John Lewis said, what happens if you don't have the bootstraps? And when you look at a ladder, what happens if there are no rungs to the ladder, if you don't have a ladder at all? And so I would say, I think, in many ways, we need to look clearly at the folks that you mentioned, Bill, as people who may be able to pull those right levers as well. If I had my choice, I would say clearly CRA is of great importance to me. I mean, I was around not too long after CRA was first instituted, and it was always focused, of course, on the income piece, but we knew that it was also about the racial piece as well, that was never incorporated into that regulation. I think now is an opportunity to say, we recognize, yes, that when you look at all the challenges that communities face in this country, it is about income, it's about geography, and yes, it also is about race. And so how do we right-size something like the Community Reinvestment Act to ensure that there's greater equity in terms of how communities are being treated. I think that there's, great opportunity to look at consumer protection laws and consumer finance and how we finance those consumers. When we talk about turndowns and rejections, the fact that 3 times, black entrepreneurs and brown entrepreneurs are oftentimes turned down 3 times more. Many have said we won't even go to an institution because we don't want to be turned down. What does it mean for somebody to be told yes, and that yes happens to be a high-cost lender or a predatory lender, but it's the first time they've ever had to, that they've heard those words before? I tell this story often. You've heard the story from me, Bill, that I grew up in a household where my father never had a checking account or a savings account. He never went into a bank to start a banking relationship because he was afraid of being told, no, we can't serve you. And so we grew up, and I don't know how I ended up where I ended up because I had no idea how to balance a checkbook, how to open up a bank account, or any of that. But what I did realize when you talk about financial inclusion is that it does take the right products and services. You have to have the right tools in place to meet the needs of communities and populations. You have to have the right policies in place that will eradicate the practices that have been longstanding in this country for generation upon generation. And then you have to have the ability to have that economic mobility so that people can move from one place to another within within their income strata or outside that income strata, to move up the ladder, if you will. And so I think, again, it's really incumbent upon all of us to look for ways in which we can pull the right levers to make that happen.
Thank you. Thanks to all of you. I think we're at the end of our time. I have to say, though, I leave here wanting to hear more from you, and I'm inspired by the commitment that each of you have to make your communities better and the work you're doing to make this country better. I think we also often talk about ask whether this is a moment or a movement. I think with folks like you sitting in the seats that you're sitting in, I'm confident that it is more than a moment. And thank you for all that you do.
Thank you, Bill. Thank you.